the PowerPoint presentation, which is on audit reports. And the first activity, before we do that, please read through this with me, because I find people are confused between the meaning of the words unqualified and qualified, specifically in this regard. If it's an unqualified report, it's an audit report with nothing outstanding or out of the ordinary, nothing to see, no need to raise any issues. That is what all companies want, unqualified. However, a qualified report, in this case it means that the audit report have some sort of but or except, so those words will be in the report, and that is what we do not want. So if we go straight on to the question, there's our three options. You'll see here, you'll see there, if I point to it with a laser pointer, the third option is a disclaimer report where there's no opinion. Now, let's see the first one. Like I explained, or as I explained, qualified, there will be the words but or and or except. And you see there they've used the words. They said, in our opinion, except for the effect of the unauthorized interest-free loan, the financial statements present fairly in all material respects the financial position of DI Limited. But it is not perfect because there's an exception or a but. So that is when it's called a qualified report. The second one, unqualified audit report. I have specifically circled it in green, green for go or good, because the words, the key words here would be, in our opinion, the statements present fairly, and the words, in all material respects, the financial position of Shaba Limited. Excuse me. The third one, and that is why I highlighted it in red. Disclaimer report or disclaimer of opinion would have the following keywords in it. I'll just read the first part. We have not been able to obtain sufficient audit evidence to provide for an audit opinion. Accordingly, we do not express, we do not express an opinion on the financial statements. So there isn't enough evidence, and we do not express an opinion. Before we go on to the next exercise, let me just remind all of you, in this case it's easy because you just have to pick the right number, and in the previous one match the columns, so you can't overwrite your answer. What I mean is write too much. But in the following questions and all other questions, please first always look at the mark allocation. And if they say explain, but it's 2 marks, we'd never want more than one sentence. But in that one sentence, you have to please use the key words. So in all of these theory or ethics or internal control or auditing questions, please look out for keywords, which you will find on the memorandums of the national papers. Right. I think this is 9.2, which I want you to please complete on your own. It's very easy, and by the way, if I go back and just show you there, you can pronounce that International Financial Reporting Standards. You can pronounce that as IFRS. And please notice in your textbook and also with this one what the difference is between GAAP, GAAP, and IFRS. Right. Let's read this report, this extract. It's the last question on this topic or of lesson number 4. It says here, the auditors say, we found that internal control procedures were not adhered to. Immediately you can see something's wrong. And documentation did not exist. Now this is extreme. For a significant portion of the transactions tested. And then because, look at the wording they use, significant, not adhered to. So because of the significance of the matter described in the previous paragraph, we have not been able to obtain audit evidence to provide basis for an audit opinion. And then finally here, look at the wording, we do not express an opinion. Now you know what the answer would be, we'll get to that shortly. Question 1. Explain why the Companies Act, and remember Act means that is the law, makes it a requirement for public companies to be audited by an independent auditor. See, 1 reason, 2 marks only. Your answer can be either it's an unbiased view presented, or because of separation now between management and ownership, interest of the shareholders are safeguarded or protected. I think that's self-explanatory. Question number 2. The audit report, this audit report is an example of a, obviously, disclaimer. So it would be the last one because of these words. We do not express an opinion. So you will remember to always then answer that option. Question 3. Who is the audit report addressed to? Give 1 reason for your answer. Well, it's always addressed to the shareholders. And why? They are the owners of the company and they appointed the auditors. Right, that concludes lesson 4, but just one more thing. With an external or independent auditor, remember the difference is they are appointed by the shareholders to protect their investment, where an internal auditor would be appointed by the directors of the company and they work only for this one company. So they will be in charge of internal control procedures, etc. So make sure you understand the difference. And the next lesson will conclude our 5 lessons on revision of Term 1 companies.